everyone. Blockchain Bernie here with my latest episode, broadcasting live from fabulous Las Vegas. We're done, guys. We're done. Game over. I mean, this was really a Black Tuesday, right? It was, if you look at stocks, if you look at crypto, if you look at interest rates and everything in market sentiment, you know, we thought like summer is over, Labor Day is over, everyone's coming back, we're going into the fall, and there's going to be a rally, right? What happens instead? Everything's going down. And let me look a little bit into why that is, what exactly happened, and except from that emotional reaction that we all have, like, oh shoot, we're done. Let's look into it a little bit more in a nuanced way and see what actually happened, right? So this is the NASDAQ here. And yeah, I mean, look at that. It's coming back a little bit after market close. So we're just after market close here. And yeah, let's have a look at it here. It's coming back a little bit. Yeah, but just a little bit. I mean, look at what happened here, right? So if we go to the NASDAQ, negative 3.06% today, right? The S&P 500, negative 2.07%, and the Dow Jones, 1.5%, right? Bitcoin, minus 1.7%, Ethereum, minus 3%, Sol, minus 2.73%, Jito, minus 1.86%, the mother token, Iggy Azalea, as just one of the meme coins that I have in my portfolio here on my watch list, minus 5%. Even the euro is down compared to the dollar. So what's happening with interest rates? The 10-year futures for the interest rate is down 1.64%. So we're at 3.836% again. So people still expect interest rates to go down, which is kind of a reasonable expectation because we're going to have a rate cut this September session, right? It's around the 20th or so when there's the next FOMC committee session, the Fed meeting. And everyone expects interest rates to go down by then. So that means the 10-year is going down. And the market sentiment today has been that people, and you see that on X posts and stuff like that on the X platform, people think like the Fed might have to cut rates by 50 basis points, half a percentage point. And that's kind of a larger cut, right? It might be seen as an emergency measure by some. So, and then some fear that if it's seen as an emergency measure, then people might panic and they might think like, oh my gosh, what's going to happen? Even the Fed has to do emergency rate cuts and all that kind of stuff. So there are a lot of fears. And you know what? Trading volume is still quite low, right? So we all thought like, well, Labor Day's over. Everyone's coming back from vacation. And then we have a high increase in trading volume as compared to July and August. This hasn't happened today. It doesn't happen overnight. And also keep in mind that that September traditionally is a month with relatively slow moving stock prices, right? It usually starts kind of the year-end rally starts in Q4, right? And I'm super bullish for Q4 this year. I think, you know, all the factors, you know, make a perfect combination to get really a rally in Q4 with everything, with the election cycle coming up with, yeah, so many things. And of course, it all depends on who wins the election. So that's definitely a contentious a matter to discuss here. And we don't know. It's a it's a very, very tight race. So nobody knows who's going to win. But also changes in the polls and in the betting markets for the presidential election, they might definitely have implications on the stock market and on the crypto markets. All right. So let's go back here and let's look at, since this is all driven by recession fears, right? And the manufacturing index came out not so nice today. So the economy is there. There are more signs the economy is weakening, but not drastically, right? It's like, but still people expect the Fed has to respond, and it might be seen as an emergency measure and all these things. And since this is all about interest rates, it's again the tech stocks and the growth stocks being the hardest hit, right? Because obviously the effect on interest rates for these tech stocks is the greatest, because the growth stocks make much of their value in the far future, right? And so we have to discount it for many, many years with a certain interest rate. And if that interest rate gets higher, then that discount will have a larger impact. So that's the reason why these growth stocks are being harder hit with interest rate fears. But the irony is now, when interest rates were rising, tech stocks and growth stocks were the hardest hit. Now we have fears that interest rates might be falling really quickly, but growth stocks are still the ones hardest hit. It's a little bit illogical here, and but still, if there's fears, and there are fears here now. There are fears today in the market that the economy could slow down and we run into a recession and everything. And the more in the future everything lies with these growth stocks, the more this negative effect somehow adds up, right? So that's why, again, these growth stocks like Apple down here 2.7 today, Tesla 1.6, CRISPR Technologies 4.61, NVIDIA another 10% today. Man, let's look at NVIDIA here. And trust me, guys, this is just volatility, right? Because there's no doubt about the long-term growth prospects of any of these companies, right? NVIDIA, Tesla, Apple, Google, all of these here. Even Coinbase down 7.7% today, which is kind of crazy. And the only thing that's going up is the volatility index. The VIX up here 33% today. Maybe it's time to play the VIX game here. I don't know. It might be a great thing. Yeah. So, and what does that mean for crypto here? It's, relatively little. If you compare that with some of the growth stocks like NVIDIA and CRISPR, all the others here, then yeah, the decline in crypto today almost looks tame. So everyone was focusing on stocks, and while this, do we want to sell everything now? I mean, it all depends, right? If you have to sell, if you need the money, I would say better get out now than waiting a little bit, because it could get worse before it gets better, right? But I think the probability is at least like 60-70% that, starting from October for Q4, we are going to see a rally. I firmly believe that. I think in probabilities, right? So nothing's guaranteed here. I think it's like 60-70%. I think it's just still September. There's a historic weakness. There's a shortage on really, major news. The thing about interest rates, inflation and stuff, it's all like pretty much like expected. And there's no really market shaking news here, which just means the buyers are home, right? They've already bought. And there are always some sellers, there's always some fear sellers, there's always some sellers that just have to sell for whatever reason. So, yeah, I mean, the buyers will come back, and they will likely come back to the latest by October, and we will see that Q4 rally. So mark my words here. And yeah, here's my thoughts to what happened today. It was really shocking to see. I didn't expect it today, I'd have to say, even though we could see some of it in the weekend already in crypto markets, in the futures markets and stuff like that. So yeah, don't forget to like this video. If you like content like this, just smash that like button. Also subscribe to my channel, Blockchain Bernie, and go to Xandeum.com. Subscribe to our stuff there also, especially get on that email list, because we're building that scalable storage layer and liquid staking product for the Solana chain, so you don't want to miss out on it. And someone on the Discord channel named John, who is participating a lot there, he recently said I should rename myself from Blockchain Bernie to Double Risk Bernie, because I'm wearing 2 watches, right? So, all right, so yeah, that was it for today. Thanks so much for watching, guys. Catch you later.